Welcome everybody to another episode of Block by Block. And in this episode, we're going to talk about options and structured option products. I have Dan with me, who's the co-founder of Rysk. We've known each other for a few years, and we did some sparring sessions on the products. Since I, of course, did a lot of trading in DeFi, also dabbled in options and with some of these strategies. But now we also are going to talk about how does an option product scale in this episode. So welcome, Dan. Thank you for joining me. Maybe you can introduce yourself and what you do at Rysk, and maybe something on your day-to-day. That would be nice to kick this off.
Yeah. Thanks, Dennis. Thanks for having me and inviting me. But also thanks for being part of our journey. You user tested the product like way before it was live and so on. So you are part of this for sure. But yeah, let me make a quick intro. I'm the co-founder of Rysk. Rysk, it's effectively a DeFi options product, but the biggest innovation is that we focus on income generation strategies out of options. So it's a very specific use case where basically you can actually use options on the back to generate income. So most of our users are not even traders. They're mostly people trying to get income out of assets like BTC or stable coins or whatever, using options in the background. And that was probably the innovation that we made into the space. Bit of background on myself. I started working in banking. That was my first job. I like finance. I didn't like much, the bureaucracy and all of that. I moved into Web2, built my own company into online education space, ended up selling that. I was always excited about crypto since probably 2016, 2017, especially around Ethereum. I like BTC, but Ethereum was way more exciting as a builder because that's what I am. Around 2020, I got very deep into DeFi. I started to contribute with a project called Open, which was one of the first options product. So effectively, since 2020, I've been into everything related to options. So I would say right now I can consider options basically an obsession. And I'm glad that after many years I can see now people using it and growing and everything like that, because I feel like that was kind of my goal into this industry. But what is my day-to-day base? Rysk right now, it's mostly engineer focused. I think we are 7 people, 6 of them are engineers. I'm the one that I used to write code. I used to be one of them, but I'm not doing that anymore. So I'm the one basically doing BD, marketing, and everything related to communication. So again, team of 7, 6 of them are building products. I'm the one basically communicating, marketing, doing all the BD. But even on the product side, I'm still very active. The way we design and all this kind of decisions, I definitely I'm very active and participating into that. This is pretty much a bit of the background story and what I'm doing on a daily basis.
Nice. And you've come a long path, not only Risk itself, but just options as a vertical in crypto. Um, it's cool to see how well it's definitely been a struggle more how this space has evolved, trying to find product market fit. But maybe we can start there, what bit of the history of on-chain options and also the relation to the probably more derivative as an off-chain centralized party. Maybe we can go back to Lyra days, maybe things around ribbon faults, one of them got exploited last week. So it's actually still relevant. But yeah, what were the problems with on-chain options, and mostly the adoption with them? And then with the structured products on top, because people were always building these intertwined.
Basically, at least for what I remember, I'm talking about 2020. We started to build the first options as a trading product, right? So the idea was Deribit is working, at least, as a centralized exchange, we should bring that on chain, right? That was kind of the basic idea back then, and that was pretty common idea when you think about for even like perps and everything. Like DYDX started because they wanted to bring perps on chain. And funny story, DYDX, I think if you see the first white paper in, I don't know, 2018, something like that, it was actually mentioned in options. Like the idea was to actually bring options on chain. So yeah, basically the idea was, should we bring that a bit on chain? And that's how like Open started, and then something like like basically other protocols. Like I can mention a lot of them. Lyra, which is now called Derive. We had a Premia, and a lot of like different experiment that basically they change some basics behind the scenes, how they were providing liquidity, pricing, and all of that. But like the concept was, we are a trading platform, so people are coming to our platform to buy and sell options in an open market, right? Or like even Egic, if you remember, like Molly, like that was also very interesting experiment back then. And funny thing, like I still talk to Molly a lot. Actually, it's like one of the person that inspired, the job that we've done. And when we launched Rysk, the first product, we were also on that space of like, okay, we want to build a trading infrastructure for traders to come and trade options. Now, the challenge of that we faced, and many others faced as well, is basically there is a very low organic demand for option traders in DeFi. And the one that they actually care are either very sophisticated or like kind of like institutional funds and so on. And for them it is extremely important to have a very good platform. And for what I mean for very good is like very liquid, very good pricing, lower spread. And so basically the problem that we all done is they were all very good products somehow, but none of the product was way better than Deribit. So people were trading on Deribit, they liked that. And so like they were basically very hard to switch into DeFi. And the other issue was, if you don't have organic demand, it's also very hard to then attract liquidity. And so it's like the massive chicken egg problem. But when it comes to option, like it's even worse. Because if you do an order book, you basically have a lot of order books for each instrument, right? So if you have a strike price, an expiry on a put and a call, that's its own order book. So when you think about like you open up, a BTC option book, you see like you have basically every single book for put calls, different expiries, different strikes. All of them require liquidity, market maker, high frequency, and all of that. So the chicken egg problem is insane. Then some people try to build the kind of like AMM or similar to GMX approach, where you create a pool to buy that. Even that was very hard because then you need to hedge an option book, and the flow that you get is again like sophisticated. So a lot of different challenges, and none of those products were objectively better than something like that. And so I think that was kind of like the mistake, if we can call it that way. But it was kind of an honest mistake that you do and you learn. And then we had an inflow of very interesting experiment, in my opinion, and we still use them as kind of a reference. And you mentioned Raybon, right? The DOV, DeFi Options Vault. That was actually, in my opinion, a very interesting idea, and that was actually built on top of Open. So I've seen them. I was Open back then, so I've seen like basically Raybon starting all this new meta, and the idea was covered calls, and specifically like they are very good instrument. Like covered call are a way to generate income on asset that you hold. So you have BTC, you are long BTC, you short a call option on BTC, you get paid to short that call option. So you basically make money on the way. Like let's say if the strike price doesn't hit, you make money. And so the covered call are a very interesting instrument with different use case, but it's actually a very good way to make income out of the asset that you hold. So what happened is they kind of abstracted all the complexity of options into a vault. So what Ribbon was doing, they were basically selling covered calls for the user. So you, as a user, you deposit into Vault. The Vault every week was selling covered call, and the concept per se was interesting. And because again, it was basically a way to abstract the complexity. You didn't have to manage position, like it was kind of all automated. The problem with that, in over time was there are a few problems, in my opinion, but like one of the main problem it was because it was very systematic. They were basically selling the call every Friday at the very specific time on the asset that it was 10 delta basically. So it was very easy to also like front run, for example, and the strategy was not risk managed at all, right? So it was a very easy way to create like a systematic strategy, but what happened like over time they lost money. So to give you an example, like if BTC, let's say, is whatever 90K, and for the next Friday, you say, okay, we sell a covered call on 95, right? What happened if the price is above 95, you basically ended up losing money, right? Even though you're not losing money in dollar terms, because you still can make money, you get less BTC back because that's how it was designed. So you deposit one BTC go to 96, you get 0 point whatever, 95, 96, whatever BTC you get, right? So people felt they were doing on a loss, even though BTC was worth more, right? And because it was so easy to predict with option that will actually sell the covered call, the market was from running them. It was, and plus it wasn't not taking into consideration the risk management of that, right? Maybe this week there is, like some certain news or, certain expectation and whatever, like probably selling a 95 is not a good idea. Like maybe it's better to sell at 100, receive less yield upfront, but at least you're selling at 100, right? So basically Ribbon lacked all of that. And what happened is in the long term, the strategy started to lose money and people were like, oh, covered call doesn't work. Like they are a bad instrument. They don't work. Everyone stopped because covered call don't work. What we've done with Rysk was, at least, this year was covered call. Actually, they are a good instrument. Like people use that a lot in traditional finance. Plus they use a lot in crypto as well. Usually OTC market is a very good way for funds to make money out of it. Strategies like cash secure puts, that they are actually the opposite of covered call. So you basically try to buy cheaper, let's say. They're also extremely common in crypto. Like there are funds or like, treasuries like Metaplanet, which is like the second biggest one after the Sailor one, that they actually use a lot of cash secure puts. So you can see that those instruments are actually widely used. They are very popular in TradFi, in crypto through OTC. And we were like, why there is no easy accessible way for people to actually get into covered calls, right? And so we looked back, we analyzed everything, and we realized, wait, it's not covered call that they're wrong. Like they're actually a good instrument. What was wrong was the packaging, how people packaged that, how people were executing that. So what we've done at Risk was, let's focus on a primitive. So now instead of being a vault, it is still an exchange where you can come, you pick your price. So if you're willing to sell a 95, back to the BTC example, and I'm willing to sell at 100, I'm gonna do 100, you're gonna do 95, right? Then what we've done it, that in my opinion is like probably one of the biggest changes, like we went for a physically settled options. So what happened is, if you get settled, and so let's say you select 95 and BTC goes to 95, you actually receive 95K USD. And basically that's a take profit type of product. So basically what happens is that you select 95. If the expiry is at 95, you receive USD. So today you have one BTC, BTC is at 90, goes to 95, you sell, you happy, you basically make USD, right? So we made this very important change, in my opinion. Plus, we made the UI very simple, accessible. Most of our users, they never traded an option before, and they understand what's going on. They understand the implications. They understand how to use it. And we have basically two use cases. Like one is, I am making a bet. I don't think BTC is going to be a 95. So give me the yield upfront in US dollar in my wallet. I don't think it's going to be 95. Give me the dollar. The other use case is, I'm happy to sell on 95. I do it, give me money. If it goes to 95, I get money upfront, plus I'm selling at 95. And so, yeah, I mean, this is basically the, all the story from the, open and the other like options as a trading instrument, and then like why the structured product or covered call worked and then failed, because Ribbon got something like 300, 400 million TVL in 2021. That was a lot. So you can definitely see the interest was there. Like people wanted that, but the product was actually bad design. So people lost money and then they stopped using it. And that was basically our assumption. It's like, okay, people want that instrument, let's make it good. And basically we launched in June, and they worked. So yeah, I mean, this is all the story, but if I can tell you like what I've learned about all of this, is that our assumption of people want to trade options as a trading instrument, it was basically proven wrong, because especially in DeFi, people have perps, and most of the people want to express a view, directional view. It's like market is going up. So instead of buying a call option on a asset and define strikes and experience on, people just go 25x leverage on a perp, and that's basically the very similar output, with probably an instrument that, you know, we might agree or disagree that is better, worse, like whatever, but like for a user perspective, it's an easier way to do the same goal. And that's what we probably innovated. It's like, we're not going to use option as a trading instrument. We're using option as a way to generate income on your asset. That's that's why we changed our approach, our assumptions. And that's probably the reason why the product right now is getting traction and is growing, and it's kind of scaling into like this DeFi. That was a very long rant into like all the option space, but again, I'm passionate about it. I've been for so long that I can talk for like hours probably about it.
It's a great overview, and like that's why I want to ask that question, because there's a lot of reasoning behind this. Like options, in my opinion, haven't failed in crypto. Like it's most of like, how can we make products around it that are a fit for the user. Like I think covered call in crypto is like a beautiful product that serves a lot of use cases, whether that's hedging against your own greed, like as a take profit, or if you want to hold an asset but still generate yield on it, that's another option. If you can sell the asset but still want some revenue from it, like it's a great option. So there's a lot of reasons why traders want to do this, but as you said, like things like Lyra, you would have to understand the whole order book, and you would have to understand like the structuring and how that yield is being generated, how you manage your portfolio, and understanding like, hey, this is a strategy that I think most people need, but it's an interface problem or a structuring problem. I think that's a good conclusion to have as a builder, and that's I think why you're seeing that traction. So it still requires like a switch in mentality, treating that volatility as income. As you said, like people want to express direction in crypto, but like, and know crypto is volatile, but then making the step to volatility as income, like selling a premium to somebody, like that's another step. But how did you see that people wanted that, even if sometimes they don't know that they want to express it, or like there's the match between this is demand and this is what I'm building, right? Like how did you see that, and how do you translate that for a user?
Yeah, I mean, that's actually a very good point, because so an exercise that I've done, and the thing that was very interesting to me is, after building into, I started to think about volatility and Greeks and all of that complexity, right? Which is probably the reason why options are so beautiful as instrument, like the complexity, the flexibility, right? But then at some point I was trying to, like basically get to the origin, and I was like, what is an option, right? Like an option is something extremely simple. It's like, it's a right to buy or sell an asset at expiry. That's what it is. Then how do you price them and everything? Like obviously there is like probability and volatility involved and all of that, right? But when you think about from the first principle, it's like, that's what it is. That's like how they started, right? And even when we were trying to tell people like, hey, you're trading volatility effectively, right? You're basically selling volatility and all of that. Most of our users were like, listen, I don't care. It's like, I literally trying to buy or sell that asset at expiry. And that's what I'm trying to do. And that's how your UI is so simple. And let me do it. And I understand exactly what's happening here, right? So what I've realized is that we tend to overcomplicate things, and it makes sense. Like there are people that need to do that. Like if you're pricing an option, if you're like, trying to do all of that, you have to. But from a purely user perspective, user were like, the UI on Rysk is as simple as, again, I click a button that's the price I'm willing to sell or buy an asset. That's an RFQ system right there, like 2 seconds auction. In 2 seconds, you basically see how much the buyer is willing to pay. Now you look at the price and it's like, okay, you're giving me, I don't know, $100. Let me just put a number out there right now, upfront, if I do this trade, right? And users are like, I don't know how much implied volatility is this or whatever. I was like, but I'll take it. It's a good bet. I'm getting paid $100 for selling BTC at 95 or for not selling it because I don't think it's gonna either, right? I'll take it, I get paid. So I think the exercise that really worked for us is like, let's go back to the origin of options. Like when you see what is an option, it's like, that's what it is. Like if you try to explain an option to a 5 years old yourself, it's like, hey, I'm giving you a right to buy something. That's it. Like you want to buy a Pokemon card, that's an option right there, right? So that's probably what worked. Now we start to see more kind of like advanced users that they want to have like more data on top of it and so on. And they're building, for example, their own dashboards and their own analytics on top of it. But like the core primitive of the product is it's very simple. It's like even the way we design, there is no liquidation, it's fully collateralized, money locked into the smart contract till expiry. Like so it's extremely simple. You don't have to think about anything except this is the price, and that's all I care. If I want to sell, I want that to it. If I don't want to sell, I want to be just below that. That's it. So yeah, I guess that's the thing. But on the other side, there was a massive opportunity because crypto is volatile. Like even right now in this market, which we can call it like a crab or bear market, whatever, there is volatility. And so because of this volatility, the yield that you can get, if the income that you can get on selling option is attractive. And on certain asset, like for example on hype, there are not many opportunities to earn a income on that asset. With volatility you can. So there are a lot of people that they still hold hype. They probably got an airdrop at 10 cents. You know what I mean? It's like, and right now it's 24, 25, still great price. They believe it's going to go to 100. So they don't want to sell at 25. And they're like, okay, let me start earning a yield. Worst case, I'm going to sell higher than right now. But for them, it's mostly speculation, right? So volatility is in this market. It's the nature of crypto. And we're trying basically to monetize that. But the user doesn't necessarily need to go deeper into how there is price and everything like that. For them, it's a very simple instrument. And that's probably the beauty of what we built.
Yeah, and I think it's good to see this as an instrument, because I think that's where a lot of option faults went wrong. They were basically asset managers with a naive strategy. Now you're giving the user a choice between those strategies that removes like you from the management equation, although you're still curating in a way what the options are. And I think that's where you found a good balance, right? Like, how far can the user think and wants to think this, but what portion do they not want to do? Which then is a good fit for also assets that are high in demand, because there's users looking specifically for those options. So this is a question also on user retention, and like it feels that it might be like a trading product, which are often driven by a lot of volume, but because it's also a bit of like a fall product like TVL, like that matters too, how much assets you're holding in those like in that period, basically. How is that like difference between users like coming back and just doing more volume? Like how do you see that as a builder, but also what's the implication for the user themselves, because that's the way they interact with this? Is it like one time deposit? Do they have to like come back, rethink? What's the strain on the user too?
Yeah, that's actually like a real good question. Like I can see the builder side of it. Like when we were building, it was like, well, what's the metric that we look at, right? And we were like, we cannot look at TVL because at the expiry we settle all the positions, right? That's how the protocol is designed. Like you put money in, that is basically the collateral, and then at the expiry, like you either get back, the USD, or you get back your collateral. But like what happened is we settle all the positions straight on your wallet. Like, so when you see the risk TVL, it's actually very funny because you have a chart that is like this, and then it's like zero, and then like up again and zero again. So we were like, okay, TVL is probably not the metric that we need to look at because it's going zero in a day by design. Volume is also not good because it's not a trading instrument that you can get in and get out, get in and get out. It's like you open the position, you go to expiry. So, and you deposit collateral. So in the example before, like if you open a position on BTC, you actually deposit one BTC, and the BTC is locked till expiry. So what we started to look at is basically a combination of both, right? Plus, we started to look a lot into the retention on basically the TVL side. So how much TVL is coming back every month or every expiry, whatever data frame we use. But the idea is, if you're opening a position today on the BTC, would you do that again next month with potentially even higher size, right? Because that's how you measure the growth and everything. So in November, we had something like 74% TVL retention. So basically what happened is like most of the TVL in November, like 75% of it was actually coming back from users that used that in October. And even more interesting about that is when you actually see the day with expiries, those are the days with the highest volume ever. Like you can go on DeFi Llama, you go options volume, and you see like crazy spikes on the expiry days because people reopen the position straight away. And that signal to me, like, to us as a team was actually very important because we're like, wait, those people are actually not using this as a trading instrument, but they use that as an income. It's a cash flow. Like for them, it's like, I have the asset, I like the cash flow I'm getting, I'm keep rolling and rolling and rolling because I like the cash flow that I'm getting out of this. So that was kind of the validation of the use case. It's like they're not making just speculation or something, they try to use it as a cash flow instrument. That's why they want to get in immediately. They're not even waiting for the market to move on that direction and so on. Like it's purely cash flow type of instrument. And that was the validation that we got. Okay, now we changed the approach. Like people are not trading this. People are treating this as an alternative to basically a yield or income generation type of product. But yeah, I still haven't found a very good metric for us. Like, so I always like tweet about the TVL because I think it's extremely fun to see like all of these up and downs and so on. But like actually every month we went all-time high, at least in HYPE or BTC terms. So people start the deposit were higher. Now the market is down. So in USD term, we're not all-time high every month, but in terms of actually asset deposited, we are. So yeah, I mean, we're growing. Retention is there, but it's tricky to find what is the best metric for this product.
That's cool. Yeah. A lot of thoughts there. So let's first say like it resonates with me a lot where I was doing covered calls, especially in like these bear market type environments where I would have income. I would schedule like every Friday on the expiry of my options to rebalance. But also, I think that's where I did some of the compounding. Like, hey, the yield from last time, that can be income, but I can also compound that. And I think that's something some of these users will do, but just redeposit. And in a way, it doesn't matter if you're then measuring that in Bitcoin or USD. One of these will grow if a user keeps doing that because they're like, hey, I'm getting more out of this strategy. And the only thing, it's actually quite amazing how unpredictable crypto is in all these volatility, but a structure like this creates some predictability that is super manageable. And then your decision is just like, where do I sell this option, or what do I want to go again into this pool or not, or a different one. And that helps a lot.
There are like a few interesting things on what you said, if I can add. But
go ahead. Yeah.
So one thing that I realize is that basically with a product like this, because what matters is the expiry, right? So you open a position, and then at the expiry there is the settlement. So what is the price at expiry? That's all. And what happened is, like, people like this product because it's basically taking emotions out of them. It's like, if today I'm willing to sell on 95 by the end of the month, even if tomorrow the price is going higher, I should be still happy to sell on 95. And you can see some user when the price is going up, they say, oh, I need to sell right now. Like, I'm not sure I want to do blah, blah, blah. But like in reality, a lot of them, they actually was like, oh, actually it's good because it took me emotion out of it. I did a round trip, for example, right? Most people, like, I was willing to sell a 95. I sold a 95. No round tripping. I'm happy about it. So this is actually one interesting aspect out of it. The other one is related to what you said about the compounding aspect. So when we launched, we only had covered calls. We believed that was a very good instrument for that market and so on. And then people, like users, they started to ask for cash secure puts. So the idea is that you deposit stablecoin and eventually you buy the asset cheaper. And as a theme, we're like, yeah, that might be good, but like, I don't think they're gonna get a lot of traction. At least that was kind of my assumption. I was completely wrong. Like, actually, it got a lot of traction. Like, at some point, I think mid-November, it was basically half of the product was cash secure puts, half of the entire volume. So it was insane, like even more than half at some point. And what happened there is that users, they started to treat it as, okay, I have an asset now, BTC. It goes up, I'm selling at 95, fine. I get USDT because it's physically settled. Now, what I'm going to do with this USDT, I'm going to put it back into the system, into cash secure puts, and I'm willing to buy BTC back at 90 if it goes to 90. If that happens, I have a BTC now, I'm writing covered calls. So I see a lot of users actually just doing the kind of like basic wheel there where they just keep the money into the system. And again, for them, it's a cash flow. It is like, okay, this is the way I'm trying to earn on my asset. Doesn't matter if it's BTC or dollar, like I'm basically moving them around. So back to what you said, yes, it makes a lot of sense. And I think the cash secure puts was actually an intuition from our community that was definitely a very good one from them that even as a team we didn't have.
Nice. Yeah, well, and I think with both products now, you actually enforce like selling high, buying low, which is like what most people forget is a profitable trading strategy. Um, um, wait, did I say selling low, buying low, selling high? Yeah, right.
I think people don't
Anyway.
understand that. The goal is to always, the goal is to make money. Like
The goal is to
that's
make
what a
money.
profitable strategy is. Doesn't matter like how you need to make
Uh,
money. That's the point of
I
this
need some more
industry.
caffeine, I guess. That's cool to have in a product, but what stands out for me is you being aware of what your users want through multiple routes. Like early days, we sparred a bit on the product. I knew you were doing like a lot of these user interviews with traders or like other founders. That's like opinionated. It's like just talking to them. But then there's also this part where you use the on-chain data, like your TVL. You're trying to come up with metrics that show you like what's working. How are my users using this? Could you tell a bit more on that process? You're using TVL. You're trying to come up with metrics, but at least you're iterating on that. Like you put out a product that you didn't think would work, but your community said it would, and then you're tracking it and like, hey, this is actually working.
Yeah.
Yeah, do you have like an internal strategy around that, or like it's just a mentality you always apply to products?
Yeah. I mean, yeah, I think it depends where, which phase you are, right? So when we started, and really well, like basically we were designing this product, we basically asked to a lot of people on our network that we believe that could be the good one. Like we asked for like, hey, can we jump on a call? I want to demo your product. Give me all the feedbacks. I think we've done something like 60, 50, 60 user interviews back in like January, February last year. I remember I went to eat Denver with my laptop, and as soon as I was, I saw someone that I knew. I'm like, hey, give me 5 minutes of your time. Took the laptop out. I was like, check this out. Tell me what you're thinking. And that helped a lot because the amount of feedback that you get from different people, different use cases on when they have a product in front of them is probably the best that you can get. It's like, I don't know what's going on here. I love this. This is very clear. This is not clear. Like, we had some very good feedbacks that actually helped on how we ship the product, and very important decisions out there. So that was like probably the first phase. And in my opinion, that's probably one of the most, as a builder, to me, that's the most fun part of the project. Like, you have a piece of paper, you design something, you build it, you start to test it, and you change it and you change it, you change it until you're like, okay, this actually is working. Launch it. So to me, that's like probably the best part. After we launched, we created a Telegram group. It's mostly our users, and I am there, and I'm very active. Like, I talk every, like, when you ask me like what is your day-to-day job, I'll probably say that I spend a lot of time to the Telegram group, reading. I was creating stickers. I was asking people. Like, the reason I'm doing that is, I first of all, like, I want to know the users. So I want to get into their relationship where, I know them, I know what they like, I know what they're trading, I know how they're feeling when, the market is moving in certain directions and so on. And then I also know some of the most power users. I haven't done anything crazy. Like, it just happened organically that they, kind of DM me. At the beginning, they were like, "Hey, how this is working? Like, can you give me more information on this? Like, this is me. I want to do certain sizes. I want to make sure I understand everything, right?" So, and then I kept a very open communication with them. So that's the way, and that's more like on the quality type of things, right? You talk to them, you get feedbacks and everything. On the higher level, because then at the end, that's what matters. And that's also the beauty of crypto. Like, out of the probably top 25 users, I know some of them, but I have no idea what others are. And that's totally fine. Like, I totally respect that. I like that. And for those users, I don't even want to go, and ping them as like, "Hey, I saw your tweet. Are you using Rysk? I don't know. I want to like." I don't feel it's the best way to do it, because privacy and everything. So then you look at the aggregate data. On the aggregate data, again, Rysk is pretty unique. So we had to combine different metrics. But again, to me, you need always two things. Like, you need to grow and you need retention. Now, it matters a lot which metrics you're using, because if you use addresses on a test net, yeah, you're growing a lot. Like, you know what I mean? It's like, does it matter? Probably not. So to me, like, obviously it matters, but in my opinion, you always need, we growing, yes. Are users coming back every month? Yes. Are those users scaling up? Yes. Okay, the model is working. Let's double down. So basically what we do is, like, I personally have some sort of, like, every Friday, usually I do that. Like, I check all the data that I have, volume, even though, again, not the best metric, but still it has to be higher than the expert before. Premium that we pay to users. It's actually insane to see how much premium is collected by our users. It's like, I think on a B weekly we do something like 500,000, and that's like money getting in, like, into the user wallet immediately, and that's kind of insane when you think about sizes, right? So yeah, the way I do it is I try to see some data, and internally we, again, in the team there are like 6 engineers, so I'm very lucky that I just send them a message like, "Hey, I need this data," and in a few hours I have it, because they figured it out. Like, that's a good thing about having control on all the stack. But again, you need to grow and you need the retention. Make sure you use some metrics that they are meaningful. So don't focus on addresses on testnet or something like that. But yeah, that's, and actually one interesting aspect to add on that is the minimum positional risk is kind of high, because it's like 2K or something like that. That was actually a deliberate decision for different reasons. But actually, one of the reasons is, like, because we didn't want to have inflated data on, for example, CBLers, or a lot of addresses doing $10 each. We actually wanted to have fewer addresses, but with real sizes, because they can basically completely broke the growth, because you see, like, oh yeah, we at 3x the addresses that we had the week before, but now, because even the 2K, it's kind of meaningful. If you look at the addresses, like it's growing very consistently, and the TVL is growing even more. So that's like users basically double, increasing the size, which is the best. But yeah, this is it.
You touched on a very important point there, like understanding who your actual user is and who's like a meaningful user for you to analyze. I think that's in any like business or marketing analytics. It's understanding users one, but also understanding who's not your user, even if they're using your platform, right? So I
And the
think for these,
potential user too, because there is something that, for example, and sorry to interrupt, but like if you just talk to your users, and this is something that in crypto we love to do, it's like we have a bubble, right? And we just think that everyone is there to, like, I don't know, farming the airdrop, like whatever, like this is the crypto industry, right? And they all have that very specific use case, but we need to also think that if you want to grow, you need to get outside of that, because at some point the growth is limited, and this is the reality of most of the products. So even understanding, like, can we go outside of crypto with this? Can we grow outside of like crypto Twitter? Can we go like, because those, in my opinion, are even more important in the long term. So even understanding like the non-user, but like the biggest user potential out there, it is extremely important. And the thing in crypto, we we're not doing that much as an industry, and that's something that probably we need definitely to get better.
yeah, and I think there's different levels indeed. Like you can understand your own smart contracts, users, channels, and then there's all like either competitors or a market inside of crypto you haven't touched on. That data is fairly available because
Yeah,
they act on chain too. But then there's this whole other part, like interacting with TradFi or users who are not exposed to the financial system at all, that now have access because of crypto. So there's like all these levels in user groups where you could grow
yeah,
towards. I think that's one of the critiques nowadays in crypto is like we're either focusing on our users or the potential users inside crypto, but we're trying to reach all of them. Luckily, with all the payments coming on chain, with like neobanks coming in, I think that will bring another inflow.
yeah,
But you need to build for those new kind of users too. So maybe that gives a question here. Like there are traditional options, ways to interact with options or get yields. How do you see this on-chain part integrating that? Like, what's the benefits versus OTC stuff or off-chain strategies for
yeah,
the regular user that is maybe not crypto native, but even crypto native?
yeah. So like when I was looking at Rysk today, and again talking to some of the users, right, I realized that we started to have some funds, for example, using Rysk, right? So I wouldn't call them like institutional, but like, crypto native funds with assets, and they're trying to earn income on top of them. And talking to them, I realized that there is a massive OTC market today, right? And the OTC market, it's basically, even I don't know how to frame it properly, but like you're relying massively on a counterparty risk. So it's basically like you open a position, like you do a covered call, and you send your BTC to a counterparty, which is the option desk. And the reason to do that, there are like many reasons. Like sometimes it's compliance, sometimes it's because the option desk needs that to hedge, or whatever reason. Like there are many reasons. So you as a fund, you're losing the BTC for that amount of time in exchange of a piece of paper saying that you're gonna get it back at expiry. Now, it happens often that option desk blow up. It's not something that should happen, but when I think about in my last 5 years in crypto in options, I've seen a few blowing up, and obviously we all know Alameda, but like there are a few more that happen to blow up. So counterparty risk, for example, is something that crypto is designed to solve as a problem, right? In traditional finance, you have that. Then you build crypto. You don't need middlemen. You don't have counterparty risk. Like, that's all the beauty of like DeFi, smart contracts, and everything. But that's also still the best practice when it comes to especially options OTC, right? And so by talking to some of those funds, they were like, hey, we are happy to go on chain. There is smart contract risk, yes. Your protocol is handling a lot of volume right now and TVL, so we're confident that it's going to get better. You guys get audits and everything, but like we are willing to get that on chain, right? So when you look at that, this is actually a better product because you rely on you don't have to go through counterparties anymore. Plus there is the automation component. Like when you want to get a quote on risk, like the RFQ is a 2 seconds auction. So in 2 seconds you see which the price that the counterparties are willing to pay. If you like it, you do the trade. OTC is like you go on Telegram, you need to hope that those guys are up at that time to run that. Like there is no real tech infrastructure and so on. So when you think about it, is objectively a better product enabled by blockchain, enabled by crypto rails. And that's at least in our small experience, but options are big OTC, and our goal was first to make them accessible to anyone. So you then is probably you're not going to do an OTC trade with an option desk, but now you can use Rysk and do basically the same in a very simple way. And now we're trying also to get more of like those funds and so on. But the long-term plan, in my opinion, is finance is running on that infrastructure, like massive counterparty risk, and it's not global and so on. This is objectively a better product. It is a better solution. Like we can probably argue a lot on the smart contract risk, and that's something that it's the whole point of this whole industry. But excluding that, it is a better product, and that's something that, in my opinion, it can be applied to any DeFi that is using crypto properly. Like for lending, they're probably better than banks, and we can basically do that. And that's what makes me also like bullish about the industry is we are fighting for giving the world a better product, and crypto enables that. So that's what I learned also, talking to our users and so on, that the practices that they're using right now are still the practices that people were using in like 80s. It's like you take your phone and you call your desk and it's going to price you an option, and then you take it out and then you call the other desk. And like basically right now it's the same. Instead of you do Telegram, right? And then you send them money and then they give you a piece of paper that is like, okay, I'm going to send you money back at the expiry. And then in the meantime, the funds blow up. I was like, again, they don't blow up every day, but like at least 5 or 6 blew up in the last 5 years. So it is more common than we think. And it can happen. They're hedge funds, right? Trading options. It's like they can blow up. But yeah.
And now you can just like go on a website, do a few clicks, and you got it deployed. So like,
yeah.
And that's for any user. You don't need those connections. You don't need special subscriptions. Like, just do it here. And I think that might also be a reason why you're also doing a lot in the Hyper EVM and Hyperliquid ecosystem, right? Like there's a certain trader there that is community aligned. So I think that's easier to talk to community. But also they're rethinking a bit like the trading products itself. Like, is that what has drawn you to Hyperliquid? Like so yeah. What are you doing in the ecosystem there, and any benefits in doing that, or could you like build this anywhere else?
Yeah. So there are different levels of reasons on why Hyperliquid and HyperVM. The first one, it's very simple. It's like when we built this new product, we were focusing on solving a problem. And then people like you, they saw the product and we announced that even before going live. And we got a crazy inbound of people from the Hyperliquid community that they were like, I want to use this on asset. I think it's the best, product right now for hype. So, when you get a DM, fine, get 5, when you get 10, it's like, okay, wait a second. Like, this is a lot of inbound now. So probably it makes sense to offer it to that community. Plus, I like the Hyperliquid community. I like even the ethos of Hyperliquid. I think I love that concept of just, heads down building. there are no incentives from, like, you don't need to do any BD call with the chain to get incentives or whatever. It's just like you barely talk to them. I was like, this is the chain. If you like to build, go and build. Like, it's very cyber fun type of thing, right? So that was good. On top of that, there is a reason that is more on the product side. Especially when we started, we didn't have many buyers, right? Risk work with an RFQ. So when you want to do a covered call, on the other side, someone has to buy, and the buyer is the one quoting into the RFQ. So you need infrastructure, you need to price the option and everything like that. At the beginning, we didn't have many. And the reason is I was trying to pitch them this product, and guess what? Not many believed into that. Like, only a few actually was like, oh, this is actually very genius, really good product. We're gonna integrate. But like many others, they were like, it's not gonna work out. Like, options don't work. Fair. You take that as, as a bet, and it's like, okay, I'll call you back in a couple of months. But that being said, what happened is most of those desks, when they were like buying options and edging straight away with perps. So Hyperliquid is the best venue out there in terms of like liquidity, asset availability, and everything like that. So it also made a lot of sense because it was very easy for them to, use Hyperliquid to basically edge and everything like that. So there is a community marketing aspect out of it. Like, people want it. One more thing that I like to say about Hyperliquid, it created a massive wealth generation with, the airdrop and everything. And that enabled the community to be also very open to new products and everything like that, because people were like, okay, I have assets, I would like to earn more on top of it. So I think it was also a very good fit for that time. So different reasons, but I also like the approach overall of Hyperliquid of like, we are trying to, household finance, which is, it can be a narrative out there, but I think risk is still an options, a derivative, even if you oversimplify that and so on, like, it is still into that category, right? And being on a place where the main product is a derivative and so on, it just makes a lot of like synergies. So I think it made a lot of sense for that reason too. So yeah, Hyperliquid was definitely the best for our product at that time, and probably one of the best business decisions that we made to launch there.
Yeah, that's good. That's it's also, it's not only a good strategy, it's just like being aligned with the community and with their needs. So it's like it's working for both of you. You solve a problem for them, and they'll use your
Make you grow, right?
products and make you grow. Yeah. So it's the real flywheel just comes from the user in a sense.
Yeah.
Before we wrap up, is there anything that we haven't touched on that you really want to share? Maybe some new news on Risk or what's coming, or some thoughts on the space where we're going next?
Yeah, so in terms of news, we announced a new product. It's not necessarily a new product. It's actually a new way to access the same product. So it's different accessibility for it. And that's related to what we discussed about, talking to users and everything. So what we realized is like there were two types of users that we are probably not serving really well. One is the user that just want the cash flow generation, but not the active management, right? So there are users that are like, hey, I don't want to pick the price, the strike price, roll the position of the expiry, and so on. Like, can you somehow make that strategy for me? So we designed this infrastructure, which is effectively built on top of what we have, that will enable, one, basically this kind of like abstracted layer where you don't have to go and pick prices and so on. For that, the idea is to basically have curation, also for other protocols, for example, to run the strategies, because we have protocols that are like, yeah, I can run the strategy on top of Risk, so we're going to give them this infra, and it will be basically more, again, infrastructure level. Plus, there is a second like use case for the infra, which is people that need a very custom tailored solution. So I mentioned we have funds right now, and the funds are okay. We're using Rysk as it is, but they came to us and they were like, "Hey, I need different strikes or different expertise. I need different asset. Like, I don't know, I'm a liquid fund. I have a very big bag of certain asset. I also have voting power. So I want to do something on chain. I want to run those strategies on chain. I like the product that you have, but can you actually make something where I can go there, custom asset, custom expertise, and everything like that?" So we designed this infra, which is called Risk Premium. And basically the two main cases is you need something very specific, now you can use it. Or on the other side is you're not a power user in a sense that you don't want to go there and pick your strike and the experience on. You just want deposit and someone to run the strategy for you. So we are kind of creating a marketplace of strategies as well. We don't compromise on security, and like collateral is always on chain. No one can touch it. There is no rate authentication, so we don't compromise on that. So even the curation model is as simple as I'm picking strikes and everything, but I'm not touching funds. We're not sending funds to anyone else, like nothing like that. This is like the basic layer, in my opinion, of DeFi. That's how it should be. Otherwise, it's not DeFi. But yeah, that's the direction, and it's basically given even more accessibility to what we have right now. Is accessible, but I think we're not serving all the potential user out there. And then the other aspect is, at least in the longer term, I do see this as a very good product also for TradFi. I do believe that if you have, I don't know, like a Tesla tokenized position, you should be able to cover a call on it, and it should be with all the benefit of DeFi. So in the long term, we're gonna try to have like more asset and so on. And that also goes back to your original point of, are we building this just for the crypto bubble? Like, people here are like to actually offer a better product to the society in that sense. And that's what we're going for. Like, people already do cover a call, people already do cash secure puts. We're gonna make them even more accessible, easier to use, global, and all of that.
Nice. Yeah, and all again user driven, listening to the users what they actually need. And I think the result is that you'll eventually have some kind of order book for options, but at least it's being built through actual usage. Yeah, it's a good way to build this product. Yeah, thank you coming on and having this conversation with me. It was a pleasure to talk to you, but also like learn more again about your user centric mindset, but also some option products that work. It took a while for this space to really figure that out, but I'm glad you're hitting a very good target group with the good product. So
Yeah,
is there any
there is
way
still
that
a lot to do,
listeners?
but
Oh yeah, oh for sure.
getting
Um,
there, I guess. We are in a
yeah.
good track.
So how can users or listeners keep following you? Is that like best on Twitter or yeah? What's your Twitter and what's the channels to reach you?
Yeah, so on Twitter, it's like, on the Rysk Finance, and Rysk is, with the Y. That's how we communicate, give all the news and so on. If you like more on, on the builder side, that's just basically like follow myself. That is Dandified. I think I should have changed my name here to that, but that
No,
would be a smart thing to do,
we'll put
But
it in the
yeah,
description with the
we
right
put it
links.
there.
So yeah.
But yeah, that's I'm like less filtered into that, so I try to talk more about experience, like failure or things that didn't work, like everything, like very openly. But if you also like to be more part of the, not necessarily the product, but like even of the discussion around that, like we have a Telegram group. It's a fun place. Like there are no filters, and sometimes like we are even too honest with people, and they also get mad about it. But it's like it is what it is. But like that's actually a group where if you like even to talk about where the product is going or ideas or anything like that, it is a good place in my opinion to hang out. I'm very active there too. Like as I mentioned, I'm trying to be on the trenches, understand everything that's coming from that. So yeah, that's probably the also the, if you want to be more active, that's the place to be.
Awesome. Yeah, I'll make sure to have all the links in the description so they can keep following you. Yeah, and just like build in public. I think that's the one of the core messages, because that's how you could just improve your product, get the feedback. So thank you for coming on, Dan. I'm looking forward to Risk Premium and like the next iteration. And
Yeah,
that was
thanks
another
a lot,
episode of,
Dennis.
yeah.
It's great
No
chat,
worries.
and again, thanks for even your contribution to Rysk. It's like a year and even more than that, just actively on feedbacks and so on. So that helps a lot. So thanks for that. Thanks for all of this.
Glad to do that. Yeah, and like any other builders, always happy to spar with them on their products or on our data or the data infrastructure, or just like trying it out by trading it and losing money. So happy to
Yeah,
contribute.
100%. If I know someone, I'll bring it your way for sure. If they ask for like feedbacks or data and so on, it's like you're the guy. All
Cool.
right.
I'll wrap up this episode and
Thanks a lot.
see you
Thanks
guys
everyone
next.
for tuning. Bye.